Hello, hello, everyone. Thank you so much for being here with me today. I am delighted to welcome you to From Setback to Wealth Comeback, rebuilding and growing your portfolio amid times of uncertainty. And I'm so pleased to have you all here with me today. My name's Lynn Kitchen, and today is all about you, your questions, your goals, and most importantly, building the skills and the confidence that it takes to create a resilient portfolio, even in uncertain times. So if you would please put your name and where you're calling in from in the chat. I would love to say hello to you. Happy, great day. Hi, Patricia. So happy that you are here. This is going to be a wonderful 2-hour session. And those of you who are my friends, my clients, I want to give you a special welcome. And those of you who are new to my teachings and all of my recordings, I want to give you a special, special welcome. I'm so, so glad you're here. John, wonderful to have you here. Good friend of mine, John. Dr. Rhonda Farrell is here. David, thank you so much for being here. You know, today represents not too far away from an amazing event that we're having in our nation. It is called election time. That time of year when every 4 years we have, and this one promises to be a rather incendiary election. Now, well, we just got through 2 hurricanes rumbling through this country of ours, and it might be that we have another hurricane called the incendiary elections ready to be upon us. And so this is an important time for us to prepare, just like one would do for a hurricane, right? To prepare for the potential of volatility ahead so that we are ready. So if you are ready to transform your financial setbacks, if you have any setbacks, into calm confidence going forward, I'd like you to put an I am in the chat for me. I am. I'm ready. I am ready. Put an I am in the chat for me. And I want to give you a special shout out. I am. That's right. I am. I am ready to. I am ready to transform all of my financial setbacks into calm confidence. Now, what do I mean by that? You know, it's been an interesting time here in Florida. Just to share with you, here is a picture of an uprooted tree that is in my yard here. And you can just feel the amazing amount of energy that it took to take this tree, and a big tree, and put it on its side and uproot the roots so that you can see the trauma underneath. How many of you have felt that kind of an uprooting in your life as it relates to your finances sometime along the way? I certainly have. I do remember the crashes along the way, the crash of 1987, and so many other big, very, very dramatic and traumatic bear markets that took the markets down quickly, very, very traumatically. And these are losses that sometimes when you have a replay of losses, you remember them as if it was yesterday. I know I do. How many of you can relate to that? Put an I do in the chat, please. This is our neighborhood little lake. We have quite a few boats that are down, nose down, bottom up, still in the drink. You know, and it feels as if sometimes when energy of volatility happens, not just in real life like in hurricanes, but also in the markets, we can end up nose down, bottom up. Am I right? Have you ever had that? Have you ever had that feeling? I know I have. If you have, I can relate in the chat there, because this is a time when I believe that all of us together can have some commonality in terms of remembering some of the times that have been quite painful for us, quite difficult. And today I thought I would begin by commemorating the kinds of answers that each one of you gave me. I want to thank you. As you registered, I asked you for a particular question, to answer a question, and that being, what is your biggest financial issue right now? And as I was looking at your answers, they all seem to kind of categorize into about um, 6 different categories. And so I thought, because you're all just gathering here now, and welcome, welcome, welcome to everybody. Thank you for all being here. I thought we would take a moment and just put up, I have a poll here. I'm going to take the same 6 categories, and let's see if those of you who are here live wouldn't mind taking this poll to just ask, what would be today your biggest financial concern or financial issue? Can you see the poll? I've made it live here. And now what I would like you to do is, this is a multiple choice, so we want you to choose which one resonates the most. Go ahead, if you will, and right now, and choose which one of these resonates the most. Give you a few moments. It might be lack of investing knowledge or confidence. It might be lack of funds for investing or cash flow constraints like debt. It might be fear of risk of loss, market volatility, or making mistakes. Many of you had said that. It might be not understanding timing and strategy in the market, what to buy, when to buy, or how to rebalance. Or it might be a lack of an appropriate plan. What do I really need? What's important for me? Do I need more income? Do I need more growth? What's a good strategy? Fear it's too late. I need a catch-up plan. So let's see if one more minute here. Looks like most of you have participated. Okay, excellent. Thank you for that. I'm going to end the poll, and let's see what the results are here. For those of you who are with me live, here are the results. We have about 8% of you live who's saying that your biggest issue is lack of investing knowledge or confidence. I get it. Others, about 8% say lack of funds, for investing, cash flow constraints, debt. This is a time of high debt for many households, and certainly you're not alone, because the entire United States is in debt, right? The highest debt load we've ever had as a nation. 31% of you said fear of risk of loss, market volatility, or making mistakes. Yes, that's very, very common. I want to acknowledge that. 15% said timing and strategy, what to buy, when to sell, when to rebalance, and so forth. That's very good. 8% of you said lack of appropriate plan. What do I really need? More income or more growth? That insecurity there. None of you said fear that it's too late, that you need to catch up. All right, well, that's good. That gives me an idea of where you are, and I want to thank you for participating in that, because that really helps me to get my comments that in a way today that will help you all the most. So I absolutely know that this is important for us to really realize, what are our issues? Is it lack of investment knowledge and confidence. And you know, it might be a combination of quite a few of these things. It might be lack of confidence, lack of knowledge, lack of funds, fear of losing, or fear of making mistakes. Very, very important. What and when to buy, what and when to sell. And so these kinds of things are exactly what I love to help you with. Not only to bring you the experience that I've had in my background, and I'll tell you about that in just a minute for those of you who don't know me very well. But also, these are individual items that, of course, you know, it'd be hard in the time that we had to answer or to conquer or to address all of these. But what I do want to do is to say that each one of these is so important to me that if you're feeling these this way, there is a solution and there is an answer. And I'm dedicating really my life to the calling that I have, which is to give back knowledge, to help each one of you as an advocate, as a financial advocate, to bring to you the kind of knowledge, security, peace of mind, information, everything that is needed or required on an individual basis to help you. So with that, what I'm wanting to make sure that you know, even if you have to jump off early today, is that I'm putting on some 45-minute calls on my calendar for the next 2 weeks, complimentary. And I just want everybody who's here to take me up on it. We're going to be putting in the chat the link that you can just go to my Calendly, and I'm putting on about 10 of these 45-minute opportunities for you all. So I want to make sure that you have the opportunity to speak with me personally, especially if we can't cover everything that is important for you. It would be a great time for you to be able to speak with me and get some really important information that's important to you. So I'm going to drop this in the link right now. And in case you have to leave early, I want to make sure that at least you have this link. Does everybody see the link? I see the link in the chat for me so that I can see that. Okay, yes. Okay, I see the link. Excellent. Okay, good. So that is important to me, that I am here for you, that you take me up on this opportunity. So here's what we're going to be covering today. I've got a lot of planned for you. So I thought, let's take a moment. Let's talk about what I'm going to cover. This is really an interesting time in our history. If you are suffering from a setback, if you are afraid of the volatility coming up with whatever, the elections, with it, you know, for any reason, this is an opportunity for us to really hone in. This could be the most important 2 hours of your month, maybe even of your year. And if it puts you on the right track, it might be the most important 2 hours of your financial future. So we're going to begin with mindset and wealth building. And then we're going to move on to, well, where are we now in the markets, in the economy, and how does it impact you? And then we're going to, number 3, go back to basics. I have been teaching investment courses for a long time, a very long time. So we're going to just cover a little bit tonight on back to basics. What does it mean to invest in quality companies? So I'm going to give you a few tips and tools and strategies, principles on really quickly, and it'll be easy. You'll be able to assimilate this very, very quickly. What to buy, sell, and rebalance. And then finally, we're going to do a little bit of strategic wealth building at the end. How does that sound? Does that sound like it would be interesting for you today? Does that sound like something that would be helpful to you today? If so, put a yes in the chat. This is going to be great. I'm so excited because this is a workshop for us to really take our portfolio, the progress that we've made so far to date, and really make some difference, make a difference for you to move from wherever you are with whatever you have. And believe me, yes, 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 in the chat, I can see that. Thank you so much. Wherever you are, whatever you have, we are going to start right there. Even if you've been through hurricanes, wipeouts, setbacks, bear markets, which we haven't so far right now, at least right now, but I certainly have in the past. And so I know what it feels like to start over, to start again, to start with what we have. And we always have more than we think we do. So it's going to be a lot of fun. I'm going to invite you to participate to the very best that you can, to ask questions in the chat if if you're so inclined. I'll do my best to get to the questions. I'm wanting this to be interactive, and if for some reason we don't get a chance to answer your question, that's what those 45-minute calls are for, so that you can call me personally. I can have my attention on you personally, looking over your portfolio or whatever it is that you need. That's what that is for. So I want to make sure that you receive what it is that you came here to absorb. Fair enough? Okay. So let me just give you a quick overview of who I am and why I'm doing this. As I mentioned, this is for those of you who don't know me. Many of you here know me and have been into my classes and been into my instructions in investment classes. And I thank you, thank you, thank you. We have had so much fun. We've had a lot of fun, especially on the Wealth Builders Express, which is my monthly membership group. At this time, it's for women only, but going forward, I may be opening that to couples and men and women. But it's been an awful lot of fun. This has been an opportunity for me to bring to you the investment knowledge that I have gained over my lifetime. Well, what is that? Right out of college, I jumped into becoming a stockbroker. Well, that goes back to the early 1970s. That was at a time when women were not allowed to be a stockbroker right off the bat because, well, it just was one of those times back then. But I knocked on doors long enough to find a manager, stock brokerage manager, who gave me a shot, opened the door for me. And back then, that was a big deal for women who were moving into the corporate world. So I became a young stockbroker. I didn't know anything about the stock market, knew nothing. I knew nobody, knew nothing. And so I began from absolute zero and built up a portfolio of clients to the point where it was strong enough to open my own firm. Wow, that was an interesting opportunity looking back, that I had the confidence to do that. I was one of the first women on the West Coast to open my own broker dealership. Now, women were opening broker dealerships and investment advisory firms in New York City on the East Coast, yes. But in the West Coast, I think I was one of 3 women who had my own investment broker dealership. So I built up that company, sold it, and then I went to work, was invited by a what we call a boutique investment advisory firm in California to be a partner owner. And so with 2 other wonderful gentlemen, I became a partner owner of a second investment advisory firm. And together we built that company up to the point where we were able to sell it. So altogether, over a 35-year career, I have built and sold 2 broker-dealer investment advisories. Now, during those 35 years, I was an investment advisor portfolio manager. We worked with individuals, thousands of individuals, building wealth for them. So we charged fees and we managed their portfolios for them. But on the side, we also had a nonprofit school called the Pacific School of Finance. So for 15 years, I also taught investment courses to adults for 15 years. Many of the principles that I teach now are the very same principles that I taught back then that still apply. Nothing really has changed because great principles are always eternal, I'm going to say. I mean, you can count on them. They don't change. The markets change, but investing principles are very, very important. And if you've never, ever learned the basics of investing before, and how many of us do have a chance to learn that? Did you learn it in school? Let me ask you, how many of you learned investment principles in school? How many? None? No? Did you learn investment principles in school? Put a no in the chat or a yes in the chat. None, not me. Right, no, nada. Right. So it's interesting. Where do we absorb it? Where do we get it? No wonder many of us as adults lack confidence, lack the clarity, lack the understanding. No wonder many of us feel inadequate, insecure. We haven't had any strategic way to really learn basic fundamental principles on wealth building, which really is not rocket science. It's not rocket science at all. So that's a little bit of my background. 34 years as a professional investment advisor. And then I retired after 2 bouts of stage 4 cancer. So I've had my own losses and setbacks along the way, as you can imagine. Because, you know, setbacks come in a lot of different flavors, don't they? Not just in business, not just in hurricanes. They come in our health, don't they? It might be a health setback or a loved one of yours that potentially you've lost, some kind of a setback that caused a hardship for you, maybe a divorce. How many of you relate that there's been some kind of a financial setback? How many of you can relate to some kind of a financial setback that now you're ready? Now you're ready to make you massively so. Yes. Hi, Richard. So happy you're here. Regina. Hey, thanks for being here. Rhonda. Yes, yes, yes. Well, see, isn't it nice to know that you're not alone? Totally. Miriam says, totally. We're not alone. And it warms my heart to know that you're all here. I want to thank you again because I've got a lot to do. Ellen says, yes, absolutely. So let's roll up our sleeves. That's the whole idea of this workshop, is to roll up our sleeves and to begin. So let's begin now. Now, as I mentioned along the way, I might stop because I have a very important guest, and she's one of my clients who I am so delighted to say that she's going to be, I believe she's driving now. She's going to be turning her car in and letting me know by chat as to when she'll be available, because she has agreed to come on and just give you a little bit of insight on what it's like to work with me as a financial advocate, and what I'm doing right now one-on-one for people and with people to really help you move your wealth practices from point A to point B. And really, it's kind of interesting because I might be the only financial advocate that I know of where I'm not charging fees for managing money anymore, because I did that. What I'm doing now really is giving back knowledge, being a financial consultant, taking each person's portfolio, allowing them to have an expert view, an expert set of eyes on your portfolio, making suggestions along the way. And that's what I'm calling a financial advocate. So we'll be delighted to introduce to you one of my clients so that she can tell you what that feels like from her perspective. So without further ado, let's get started. First of all, let's start with mindset. Mindset is the root of everything. You all know that. But let's talk about the mindset of wealth building. How many of you have actually thought about, do I have a wealth building mindset? Let me ask you, how many of you feel like you have a wealth building mindset? Never thought of it that way? Have you ever contemplated? Yeah, question mark. I think maybe. Yes. Okay, we have one person said yes. Great. In theory, that's a great, wonderful answer. In theory, we feel like we have a wealth building mindset. Why? Because we all want more. We want more of everything good. And why not? We want to build progress. We want more of assets. We want more success. Well, that's just the way we're wired, right? We want more. But in my view, there is a particular way of thinking when you are building wealth. And I want to talk a little bit about that right now. Here's the underlying principle. First of all, I believe, and these are my beliefs, and I want to inculcate you with the same kind of mindset, that wealth building is a particular type of mindset in that you begin to feel a little bit differently about yourself when you realize that everyone, this is my philosophy, inside everyone is an ace money manager already, just waiting to be empowered. These are your natural gifts. You already are an ace money manager. Why? Because you already have more power, more knowledge, and more experience than you think you do. As a consumer, just think about it. As a consumer, how many years have you been on this planet consuming, buying, looking at values, finding, going to sales, looking at relatively, the relative price of things, looking at real estate, trying to find out, is this a good value? Is it a good time to buy? Is the real estate industry going down? Is that particular house on the corner at a good price? And actually, all of the experiences that you have accumulated over a lifetime already gives you the credentials of being an ace money manager already, but you don't think of yourself that way up till now. So because you're here, I want you to begin thinking that, oh, I'm already an ace money manager. I know more than I give myself credit for knowing, and that is true. So now all we need to do is make a decision, to decide that it's a priority for me. I actually want to build wealth. I want to make sure that I pay off debts if I don't have the cash flow that I want to, if I don't have the amount of money that I need for investing. It's going to require that I make some changes. So a decision is first. Mindset starts with a decision. Now, it also begins with a recognition that we've been programmed. This particular slide starts with women know good value when they see it. I'm going to include men in that too. You know good value. It's just that women have been programmed for sales. We buy swimsuits in the winter when they're on sale. We used to buy fur coats, as they said. Fur coats we buy in the summer when they're on sale. In other words, we manage households. We manage children. We're always looking for ways to creatively manage households. So we know value. Women intuitively do, men do too. But here's what happens. We get conditioned by our own emotions, emotions. So part of the mindset of building wealth is learning how to have what I call a calm, confident investor's mindset, where even though those around us are moving through the cycles of panic or fear and so forth, and potentially moving into all kinds of ramifications of emotions, that doesn't have to include us. How many of you would love to go through your life with less emotions around money? How many of you would love less emotions around your money, your relationship with your money? Me, me, okay. Me, yes, yes, yes. Okay, well, you're not alone. This is important for us to all recognize that we not only as human beings naturally are emotional beings, but we're also programmed, more so in money than before. So part of the mindset is an awareness that we are programmed. Well, this is the programming right here. Very simple. Many of you have seen me use this chart before, very simple. But this is the emotional cycle of investing. And I would say that we have been through this year a very interesting bull market, have we not? How many of you really have seen your investments go up in value this year? Those of you who have a stock portfolio, bond portfolio, real estate, not so much, right? Because we've had a down year in real estate, but we have had Standard & Poor's 500, Dow Jones, and so forth, up nearly 24% to date since January 1st of 2024. Record and excitement, optimism, excitement, thrill, euphoria. Look at this. This big arrow right here says this is the point of maximum financial risk when we're all feeling pretty confident. Why is that? Why do you think? How many of you think that you know why that is? Why is a bull market potentially the point of maximum financial risk to you? Ego. Because we're doing well. We get complacent, right? We take our eye off the ball, right? It's about to come down. Yeah, that's right. You got that. I mean, because why? It doesn't always have to come down, but it is overly optimistic. Yes, absolutely. But the trend is that the next move potentially is going to be down, not always, but it is true that as the markets trend upward, it's like a rubber band being pulled out into a more and more tension. And what happens when it comes to a maximum tension? It's going to come back, especially if you let go of it. It'll come back quickly. But, oftentimes markets go in that pattern. It goes out, expansion, back, contraction, out, expansion, back, contraction. It's the way of the world. We live in cycles. So mentally, psychologically, mindset of wealth building, understand that there's a time in which we are in euphoria. We need to make hay while the sun shines. You need to be making very, very good decisions and maximize that time frame. And then as things begin to move back again, there's a mindset of conservatism. That's a new word I just made up. that you begin to recognize, even inside yourself. How many of you are feeling some anxiety? Denial. like, oh, it'll always go up. My NVIDIA will go up forever, right? Sometimes when that's not working out so good, as the trend comes back down, you start to feel fear. Well, we haven't felt that this year, but we certainly have had times in our lives when you have felt that. How many of you can remember 2008? How many of you can remember the fear that you might have had or experienced in, excuse me, 2008? Yes? Yes, absolutely. 2008 was a big contraction, financial probably really 2008 was our last major big recession. We can all feel it still, can't we? As if it was yesterday. I can. But anyway, we absolutely feel this until we feel despondent. Like I made so many mistakes. How stupid. And just think how we think about ourselves. No wonder we don't allow ourselves to feel like we're ace money managers, and we begin to erode the kind of confidence that we thought that we did have. Why? Because of this is natural. So if we begin to think quickly that there is a way to inculcate confidence by means of making sure that the emotions are at arm's length, so that we can feel ready to be ace money managers at any time, to not make it a personal thing. We're able to actually to create more wealth faster without the emotions. But emotions, as I'm going to be talking about the elections coming up, is subtle. We're conditioned. It's subtle, but so things to be thinking about, things to be watching for is very, very important. Richard says, I would like to have a portfolio to feel anxious about. Okay, I like that. That's a good goal. I'd like to have a portfolio to feel anxious about. I hope that is true for all of us. I'd like us all to have massive portfolios so that we have the kind of mindset to take them seriously, because as you build something, you want to protect it. Am I right? As you build something that really is important to you, including portfolios, assets, you naturally want to protect it. That doesn't mean that you won't have losses. You want to be able to emotionally understand losses as well, right? And that's part of why I'm teaching this today, this 2-hour, because many of us have gone through these loss cycles lately. Unfortunately, I have so many friends here in Florida who have lost everything, their houses, their cars. The only thing they do have still is their portfolio. So that's a good thing. At any rate, it's part of mindset is to be aware of the emotions that are affecting you. Well, guess what? That's normal. This is a chart that actually takes that emotional up and down and puts it in one chart, a view of what's really going on with your life in the economy. And this is a chart that will explain from 1971 all the way to 2023, all of the cycles that has been going on. In the blue have called financial cycles, up and down, up and down. Does that look familiar? Up and down, up and down. And then business cycles in the red, a little bit more faster, a little bit faster. So as we understand that emotions are buy and sell, we actually make decisions based a lot of times on emotions, but it can be translated into prices. It can be translated into what's really going on and what is creating an economic cycle. So that being said, this is an important understanding for your mental mindset, to know that emotions are part of the business cycle. It's part of being human. It's part of making money, having money, investing money, growing money, losing money sometimes, recalculating, building again, building again, building again, sometimes losing a little bit of that. But then what happens over time is that the business cycles, if we would take all of those business cycles all the way back from 1922, this is a 100-year chart of the Dow Jones Industrial Average that actually takes all those little cycles and smooths them out for almost 100 years. What do you see that is a common denominator here? What is the one thing that you're seeing that, I mean, this is very important for you to understand? Up, up, up. Patricia said it's up, up, up. And that is true. It's almost like a 45-degree angle upward. If you take any chart over the last 50 years, 20 years, 50 years, 75 years, 100 years, you're going to see this kind of an angle. Yes, it goes down underneath the mean. We call this the mean. It sometimes comes up above the mean. It might be a little bit overpriced, comes back to the mean, but in general, it goes up. All of these little business cycles going on all the time, going on all the time. Just think of your emotions, up, down, up, down, up, down. Well, what if over a 50-year period of your lifetime, you could make a decision, have the mindset that you're going to build wealth and understand these cycles and do the very best you can over time to purchase when things are on the lower end of the cycle and ride for a long and nice period of time, maybe lighten up when markets are on the high type of the cycle. And that's really how anybody builds wealth over time. That's how Warren Buffett did it. That's how any great investor does it. That is how I have done it. And that's how I can teach you. And that's how you can do it too. It's partly the mindset. It's partly getting over emotions, but then it's also adding in the knowledge and the principles on what is consistent. How can we take this, unknown, seemingly alien world of investing and make it comfortable, make it a happy place, make it a place where you can build wealth over time. So this is something that we want to really understand, is that mentally, we need to plan on living long, on living a nice long life. Why? Because we're all aging longer, and we are in this time in which the pharmaceutical industry has gifted us, the technology has gifted us with so much amazing technological advancement. We need to plan to live a long time. And that is going to just go right into your favor, everyone, because that means that you have time. You have more time than you think you do. It's not too late. You can save and invest and begin to have a great investment portfolio yourself. And, people who are over 65 today have a very good chance to live to 90 or 95. That's 30 years. But studies reveal that many of us have not saved enough. Well, it's not just the savings, it's investing properly. So investing should absolutely be one of your priorities. It is one of the ways that we build wealth. And it is not only the way that people amass fortunes. It's not only the way, but even companies, even if you are an entrepreneur, you are investing in your own company, your time, your labor, your love. Am I right? And that can be wealth building as well. And most people who then get at a point in which they have enough money built in their corporations to pay themselves well, then they move it right here to where we are today, building a portfolio, looking at how can we maximize our wealth, how can we maintain our wealth over time. So these are important part of the mentality. Many people get a little bit confused about why it's so difficult. Why is it so crazy? We've got inflation to figure out. Here's a little bit about how inflation, how we need to make more money to even keep pace with inflation. Yeah, that's true. But these are important ideas for you to really consider, that there's no, that it's natural. It's part of a natural business cycle, that in reality, what's always going on all the time anyway, is that the markets, gross domestic product, this is a chart of what's really going on, the gross domestic product, which is our production, all of the companies in the whole world who are buying and selling products over here, versus time here. What's really going on all the time is expansion and then recession, and then expansion and then recession, and then expansion and then recession. But that doesn't make recession a bad word. How many of you feel like recession has been such a bad word? Like capital R, recession. Oh my gosh, we're moving into a recession. Batten down the hatches. How many of you feel that way for the word recession? Yes. Filled with fear. You're right, Patricia. It's ingrained in us. Well, sometimes recession is needed. It's almost like a way in which the economy has of filtering out those businesses that are not exactly the highest production value. So this is a business cycle. This is normal. So as you understand that, over time, you can actually begin to put your money, to allocate your funds best during the time when after a recession, when the prices are down, right before an expansion, which it always happens, it goes up. Now, we might be in a expansion time right now. What do you feel? How do you feel about where we are in the market right now? Give me a show of hands. How many of you feel like we might be at a peak? How many of you feel that you just intuitively that we might be at a peak right now? Yes, yes. You have a few yeses, some yeses. How many feel that we're not at all in a peak and that there's more expansion ahead? John says yes, yes, yes. Mimi, no. Okay, no. Mimi says no. Is that right, Mimi? You feel like there's more expansion ahead? Is that correct? More. Continuing. Okay, that's great. So let me ask you, with this in mind, having a mindset of creating wealth over time, do you see why wealth building is a long-term process? There's no real discussion here about get rich quick. There's no real discussion about, oh, did I miss it? Did I miss the NVIDIA craze? Did I miss it? Gee, I didn't hear about it in time and it already went up. I guess I'm left out. Has that been your mindset? I guess shoot, it's all over now because I just wasn't on the train. I wasn't in the loop. I didn't know about it. So who cares? How many people have often caught yourself feeling that way, like it's too late. The goods have been made, the fortunes have been made, I've been left out. If you feel that way, it's a mindset. And I'm here to just help you recover from that mindset. Regina, thank you for being honest. Regina, me, yeah. Natasha, yeah. We all feel that way a little bit. But there is another part of me that I want to help you understand, that with a little education, we're going to help you get over that kind of mindset. With a little education, you're going to say, no, then I'll be on the next one. I'm going to get ready to get on to the next one, because there will be a next one and a next one and a next one. And how many of you are looking forward to 5 years from now at 2030? What kind of market are we going to have then? How many? You won't even recognize your life in 2030. All of the technological booms that are going on right now, that we're just beginning to get a taste of. Richard, I'll be 80. That's wonderful. My mother started her best portfolio at the age of 80. She lasted until 100, almost 100. She made the best decisions with the kind of wisdom that she had acquired throughout her lifetime. And that's my point. You have more knowledge that you are acquiring throughout your lifetime as an ace money manager, that you really know how to make decisions better than you think you do. So at the age of 80 in 2030, that means you're 75 now. I'm 73. We've got great opportunities ahead. There may be several business cycles between now and then, but most likely it's going to be on the upside. So we have a lot to get ready for. And I like to say, there's always a new train coming down the track. That is the cool thing about investing. There's always a new technology being built. There's always something new coming down. And by recognizing them, by seeing them, by getting an awareness, having the mentality and the mindset goes a long way. How many of you agree with me and are enjoying what I'm talking about so far? Put yes in the chat. Indeed, yes. Okay, that's wonderful. I appreciate that. Yes. Okay, awesome. All right, well then, buckle up, there's more. Now, anytime that you have a question, I'm open to that too. So all of that is important for us. Okay, here's a question. There is a widespread belief that the United States stock market is due to crash next year. It is at an all-time high. A widespread belief. I love that phrase, because a widespread belief is believed by whom? It may be believed by a group of people. Those are called the bears. People who believe that the markets are too high and is going to go down. Those are bears. And then there's another group of people who believe that it's not too high, it's going to go higher. Those are the bulls. So yes, there's always both camps. There is a widespread belief in both camps. And guess what? That's what makes markets. That's what makes the friction between the buyers and the sellers at any one time. Yes, there's always a time in which the markets go up, the markets come down. But over time, take a look at this chart. This is going to answer some of your questions here, or your thinking. This is the Standard & Poor's 500 of our strongest companies over time, starting in 1900. This is a 100-year chart. I just love this chart. One of my very favorites. Why? Because it shows us that, yes, when markets get too expensive, then they come back down, and then they move back up again. Take a look at what's happened here back in the early 1900s, when we had World War I, when we had the Depression first. And basically the market went up and out, up, down, but there is a green line that smooths that out, so it looks pretty sideways. And then it had the roaring 1920s, and the stock market went way up. I'm sorry, the depression was over here. This is the progressive era. Here was the market peak, the very market peak in the top of the 1920s. And here's the Great Recession. It went down very fast. That recession was a depression, wiped out a lot of wealth. And yet, there were quite a few people who made fortunes during that time because they had the right mindset, and they're looking for the right thing, and they began to purchase at the right time. Here you have World War II. Here you have the Korean War. Oops, sorry. And so the point here is that over time, we can have a lot of reasons for the markets to move down, a lot of reasons for the markets to move up. Look how many wars we've actually lived through, probably in your lifetime, in my lifetime as well. I was born in 1951, right about here. So we had the Korean War, Vietnam War. Here we have, more wars ahead. Actually, we have more wars now. Afghanistan War. But during this time, what was going on is the technological advancement that moved the market up regardless of the wars. So what's been moving up, and it continues to move up? What is the engine behind all of this? That is what is important for us to learn. And if this is something that fascinates you, as it does me, we can, stick with me, because that's exactly what we're learning is what is the engine? What would take the market up? If we do have another big bull market ahead, what kind of things will be engineering that market advance? Or will we be in a short-term bear market for a while? Yeah, that's right. So things move up over time, according to this chart. It's a pretty good representation of how wealth is built over time. It actually does expand. It expands over time. Now, being an ACE money manager is all about managing your assets. And of course, accumulating assets is part of it, whether it's your home, whether it's, savings. The emergency account is the first most important asset for you, to build. You may have stocks, bonds, and other art and so forth, but the diversification, this is all about how to diversify so that not just, you're not just in one asset class, because the economy does have that kind of an up and down motion that favors one area over another at a particular time. As I was mentioning before, we've had a very, very important bull market in the last 18 months in stocks, bonds, gold, other liquid assets, but not in the real estate area. We've had a very, very sharp commercial recession. We've had a very sharp residential pullback. So at any one particular time, there is a market that can be going up or down. So that's why diversification is absolutely important for wealth building. It's important for you to feel like you are a money manager managing assets. So now, would it be okay with you if we moved into the second part of our discussion today, which is, where are we now? It's the top of the hour. Where are we now? Yes, the replay will be available. If any of you have to jump off, I just want to remind you that I do have this, you're all invited. I have some extra, I'm putting on some one-on-one time that you can call me and we can take a look and you can ask me your particular individualized questions. I want to thank you for being here so far, but stay with me because the second part is just going to get even better. I've got another hour of amazing information for you, as well as a special guest. So let me just check my text. Okay, great. So where are we now? Okay, here's where we are. King of the hill. The bull is still king of the hill. And of course, he's sitting on top of all of the other potential other asset classes. Here's Bitcoin, here's yen, the dollar, gold, silver, and so forth. The stock market has had probably the most amazing bull run that I've seen historically. Very, very sharp rise, upward rise, and it surprised everybody, hasn't it? It certainly surprised me. About March of this year, we were looking at some bank failures, and everyone was going, uh-oh, watch out below, could be recession. And that's basically why the Federal Reserve was very careful in not lowering interest rates too quickly, because they also saw these potential possibilities of recession looming on the side around. But actually, the bull market trend was strong enough to withstand and actually overcome many of the forces, or what we call headwinds. So one of the reasons why the stock market has been so strong this year is because of corporate profits. The corporate earnings have continued to be strong, and they are growing. So this is a chart that shows you from 1995 all the way to 2024. This is the pattern of the growth of earnings in most of the companies here in the Standard & Poor's 500. At only one time, and that was the recession of 2008, which you all remember, that was this biggest dip right here. There was another dip right here during the pandemic. But basically, it's, again, this is what's underneath. This is the fuel, that's a fire that's happening, that's being fueled underneath the bull market and all the prices that are going up, is the corporate earnings. As long as corporate earnings are moving upward, the prices will follow earnings. So that's just a little tip for you to understand what is it that actually creates price movement. It's earnings. It's the quality and the strength of the underlying earnings, whether it's an individual company or en masse, the whole Standard & Poor's 500. So that's an important thing for you to know. Now, what's coming up that can disturb that? How many of you are anxious about next week? Show of hands, please. How many of you are anxious about next week? Put it, yes, I'm anxious, or nah, yes, okay, yep. Anxious. You know, that's an emotion. You have to really make sure you check in with yourself extremely, okay? Yes, yes, very. Some people might be saying, not so much. It's okay. I'll get through it. We'll figure it out. What's interesting is that anytime we have what I call an energy ball of change, that is going to create short-term volatility in the market. And that short-term volatility can feel like a hurricane coming through. It's so interesting that I just came through this, and that's why I wanted to be with you today, because it's so similar. It's like a hurricane coming through, a ball of energy, and once it passes, things can get back to normal. Not all things. Some people have damage and they need to recover. Maybe that's you. But what does happen is that some people feel that they want to capitalize on that chaos, unfortunately, but it's possible. So let me create a scenario for you. What if this time next week after the elections, we get a clear winner? We get a clear winner. We all, we all vote, and then within 24 hours, we go to bed and we get up and we find out who the winner is, and we have a new a president elect within, a modicum of, say, 24, 48 hours, and we know who it is. It's over, you actually get a resolution to all the buildup, and we have an answer. How many believe that is possible? And then how many of you believe that, that's not going to be quite so easy? This is the highest, most incendiary election that we've seen in decades and decades. And we have been through decades in elections in the past that were not so clear. This one is so close, razor sharp close, that it could go either way with the flip of a coin. And we've had experience in the past that if one party doesn't like the outcome, they will make some kind of a rebuttal, or I remember when they actually had the whole state of Florida recount their votes. Remember that in a past election? It can go to court, and it doesn't mean that just one side is a sore loser or anything. It's just that it's so close, they're going to potentially want to verify the results. And if the other side wins, potentially the opponent would also want the same, to take time to verify the results, or maybe even argue over it, or maybe even worse. Potentially, we may not have a clear winner in 24 or 48 hours. Potentially, it could be an unknown that goes, to this whole big problem of, well, who did win, and what is the truth in it? And it could even go to court. It could even go to the Supreme Court. In other words, we may not have the actual result of the election for a while. And what's that going to do to the market? That might be a scenario for some chaos. Am I right? And that just might be a reason for thinking ahead right now. If you do have a portfolio in which you have received a lot of gains, maybe you have some gain on paper. You haven't taken the profits, you haven't sold. But, this could be a time this week to make sure you're looking at your portfolio to weed out anything that you really don't want to be holding on to, because maybe the earnings are weaker than you thought that they were. Or maybe you just want to cut back a little bit because you want to be more careful, a little bit more liquid. That's what I've been doing this week, the last 2 weeks. I've been looking at my portfolio and looking at those places where I can take profits and move a little bit more into cash, just for safety. It's almost the same as, batting down the hatches, getting ready for a hurricane. We've been notified. We have advance warning. Let me put it that way. Hurricane is coming. Hurricane is coming. Advance warning. So you do have an opportunity to pay attention. Does that mean that this is actually going to happen? I don't know. Nobody has a crystal ball. But it's important that this is where we are right now, right in front of a potential disruptive time in which the markets are going to have a reaction, a volatile reaction. It might be that it's smooth sailing. I don't know. But I certainly have had enough experience watching the markets in the past during divisive elections, and we haven't had that many divisive elections. Most of them have been pretty civil, but we're in a new era. So here's what we can do. We can have a new choice, and that is to develop calm confidence. What will create calm confidence for you, no matter what's going on in the outer world, no matter what's happening out there? What would create calm confidence for you? I'd like you to consider that in advance. What could create calm confidence for you? For me, as I just mentioned, as a portfolio manager of my own trust and of my family's trust, I have gone through my portfolio to weed out those companies that I feel have had less than stellar earnings. The prices might be out, crazy high. For an example, I'm going to give you an example. I'm going to give you an example. Here's an example. This is a chart of Walmart. Walmart is, this is only a 5-year chart. I'm going to show you, this is the price action. This is a chart of the price action of Walmart over the last 5 years. It looks like it's gone sideways for much of 3 to 4 years. And then all of a sudden in the last year, it's just gone way up. And as you understand the earnings cycle of a company, you begin to look at some of the underpinnings and begin to learn things like the price earnings ratio and what makes a company more expensive than usual. And in this case, Walmart trading up here at $83 a share or so, relative to its normal $50 a share, boom, way up. The PE or price earnings ratio is all the way up to 44 times. The normal price earnings ratio of Walmart is closer to 18 to 22 on a normal business cycle, 18, 22, 18, 22. It's all the way up to 44. So this week, I sold half of my position in Walmart. Not that I don't love the stock, I do. And I believe it'll continue to move up. So I have the other half that I'm going to be hanging on to. But I sold that inside my IRA, which is tax deferred. So I don't have to pay any taxes on that. So it was convenient for me to take a look at what do I own, and you can do the same. What do I own that could provide some liquidity for me at this time in the market? The markets are extremely expensive right before a volatile time in the market. Now, if I would go back and take a look at Walmart and look at a 20-year chart, which is kind of interesting to look at visually, take a look at this 20-year chart all the way back to 2005, where the Walmart basically was going sideways right around between $20 and $30 a share for decades before it started to move up a little bit. Now this has been in my portfolio for over 20 years. This is called a core holding, where you can purchase something that has good earnings and buy more of it along the way as its earnings continue to stay strong. And Walmart's earnings have continued to stay strong for very, very good reasons. Very good reasons. They've actually been the low price, competitively, and the rest of the world retail closed their doors, right? And so people have been going to Walmart. Well, at any rate, their earnings have been going up, sales going up the whole time, sales, earnings, so forth, as evidenced in its price. So continuing to buy more over this time. And then all of a sudden, whoop, like that, a huge uncharacteristic move on the upside. So that would be a signal for a potential highly priced. So what do? We take some profits, hold on to the rest, and then wait and see if it comes back down to 60 area or so, 65. I might go back in and buy some more. But that is kind of a little example of some decision making that I made and that you can make on how to create calm confidence. So now I have that cash on the sideline that is giving me a little bit more confidence. Once this energy of volatility moves through the system, I could go back in with that money and find a fresh new vehicle that is correctly priced today that looks like a purchase that I would be interested in going to purchase. So these are the kinds of things that I love to advocate for people so that you can truly understand how this is utilized in real world. So here's my election perspective. Would love to share this with you. My election perspective is that history shows that returns, the election returns, returns in the market returns are unrelated to the presidency. And this is a chart from 1933, compressed, compressed from 1933 to 2023. This is a chart that shows you that it still is going up in that 45-degree angle. This is the price of the market. Even though we've had successive changes of presidents between Democrats, Republicans, Democrats, Republicans. Oops, sorry. Democrats, Republicans, Democrats, Republicans. And this graph, this one graph is quite interesting because it says that if you had invested $1,000 back in 1933, well, I wasn't alive then, but let's say my grandmother invested $1,000 on my behalf, and then she gave it to me. But that's just a fantasy. But had that been done, $1,000 back in 1933, it would be worth $21.5 million today. Well, wouldn't that have been wonderful in hindsight? Lots of things are in hindsight, and I'm not saying today that you can make that kind of crazy wealth. But you can begin today. You can begin today if you haven't already, or those of you who have great portfolios, you can get even better and take advantage of some of the new potential technology and the pricing going forward, whether or not we have Republican or Democrat in the market. So over time, history tells us that the actual pricing mechanism of the market has no effect on whether it's Republican or Democrat. Now, it might in the short run. I grant you that. In the short run, it'll have an effect. But in the long run, no. And what are we investing for? Are we investing for the short run, or are we investing for the long run? Do you have an answer? You want to, you need to answer that for yourself. I can tell you my answer. Even at 73, I'm investing for the long run. That's how you build wealth. You think investing for the long run. Long run is the best thinking mechanism for building wealth. Okay, and then here's why this is important. Because everybody is fearful of the worst case scenario. Recession, that's the big R, right? Am I right? Everybody is basically afraid of what? What's the worst case scenario? Recession. Nobody wants to live through that again, right? Yeah, it was painful, 2008. Did we survive? Yes, we did. Okay, so why don't I fear recession? Question mark. And this is what I'll teach you, and this is how I will be advocating for you, and this is how I help you become an ace money manager so that you too can feel this way. You don't have to fear a recession. every one of them has been followed by a strong bull market. How many? How many? How many recessions? Every one of them. I want you to put in the chat, every one. 2 words, put in the chat, put every one. Every one. Every one. Every one of them. That's why I don't fear a recession. Actually, we don't have a recession now. We've been in a rolling recession all along, and yet the markets are still going up. I think this is so great. So this is a wonderful time to pause for a minute as I put back this chart about the long-term chart of the market. I'd like to just pause a minute here and invite my friend, I believe she's waiting in the wings, Rachel Moore. Rachel, are you able, you're listening, and I'm wondering if you're able to click on your link, and if so, I would love to bring you on board here. Let me see if we can make that happen. Let's see. I'm going to ask you to unmute. And can you hear us, Rachel?
Here I am.
Yes, good, good, good. Rachel Moore has been a wonderful friend of mine who became a student and then who became a client. So let's take a moment, and I want to welcome Rachel. I don't know if you can come in by means of your video. You might be in the car, as I mentioned before.
Yeah,
What's
I
comfortable
am.
for you?
I'll just talk. Sorry, I'd like to be on video, but I'm driving.
That's all right. Rachel, I want to thank you for being here because I, first of all, adore you, but also there's a particular reason why I asked you to be here, to just let everybody know what it's been like to work with me this year, for a whole year so far, as a financial advocate.
Lynn, thank you for the opportunity for talking about this, because it has been really amazing. I have had an investment group working with me ever since my divorce a really long time ago. And I had a very intense career and had to focus on that and never really paid a whole lot of attention to the financial aspects of things. And I trusted the group who was helping me, and they did a great job. A couple of years ago, Lynn and I sat down and talked about what she was thinking about helping people, especially women, with investing and their confidence. And I said, you know, I'm confident in the people who are helping me and have for a very long time. They've done very well for me. But it's getting to the point now where the guy who I've been working with is handing off to a new person who I really don't know that well. And I am not educated enough to be able to have impactful conversations to make sure that they're still taking care of me the way that I want them to take care of me. And
may I just interrupt a second, because
absolutely.
For clarity, I believe I want people to know that what you're talking about is your investment money managers that you have hired, and you have a group of investment money managers that you are paying fees. They're managing your portfolio for you and have done a very good job over the last 10 years.
Yes, thank you for that clarification. And so I wanted to be able to ask intelligent questions and just make sure that I was going to end up staying on the same track, because I really haven't, we've talked, and sometimes things that they invested in weren't really aligned with my values and beliefs. But generally speaking, lately they've been doing that. And Lynn said, yes, I would be happy to look at your quarterly statements, and we could talk about, the things that I see, being Lynn, and things that you might want to talk to them about. And she helped me formulate questions and have the confidence to talk to them like I knew what I was talking about, which I do because Lynn helps me. And it's been very interesting because I've gotten great feedback from them, what great questions there are that I've been asking them. And we've developed a better understanding of each other and a better relationship with each other now. And I must say, I will tell you that the guy has taken on a new partner, and they actually said that they would love to come up to my house, which is a couple of hours away from where they are in Atlanta, and sit down and have a conversation in my home, and then just go around with me in the area to get to know more about me and where I live. And that had never happened before, which was just really cool. And I really do attribute that to the guidance that Lynn has given me over time. And I feel super confident now in what they're doing with me, and that I have the backup if something does come up to be able to address it with them in a very professional and knowledgeable way. And for that, I am incredibly grateful to you, Lynn. Thank you so much.
Thank you, Rachel. Thank you for your time and taking time to be in the car and be on the phone with us. I really appreciate it. Thank you so much, Rachel. Is there anything else that you want to add?
The only thing I would say to everybody on the call is work with Lynn. She's amazing. She has incredible experience, and she can help you get rid of any worries that you have around money. And she's done a great job today. I think I've really enjoyed listening in, Lynn. I haven't heard the whole thing, but keep up the great work. And she's a gem, so sign up with her and let her help you as well.
Thank you, Rachel. I appreciate you. And really, I just wanted to bring Rachel on. Thank you so much, Rachel. For the benefit of everyone else, this is an almost like a public service calling of my heart, that I'm opening up some of these special times, 45 minutes per person for you, so that you can jump in and speak to me about what's on your mind. What are you dealing with? What each one of you have individualized circumstances. Some of you have investment managers like Rachel does, and you want to get better. You want to be able to have better conversations. You want to be able to have somebody looking over your shoulder at their progress and saying, hey, well, what about this? And what about that? And it takes an expert pair of eyes to be able to discern and to figure out what is being done for you. And because of my background as being in a investment portfolio manager for so many years, I intuitively can see things that potentially you have not been able to see on your own. So really the role is, as a financial consultant and financial advocate, is to just have somebody on your side of the desk, have somebody in your corner, have somebody really just looking out for you. Maybe some of you don't have investment advisors. Maybe you are doing it yourself. on a done for you basis. I wouldn't be doing anything for you, but what I can do is help you to make better decisions on your own with better information. Because first of all, I know how to find the good information that you might be lacking or needing. And secondly, I know how to interpret it so that you can have a faster, more accelerated progress if you are making your own portfolio decisions and you are wanting to build wealth over time. And what that takes is not just the right mindset, not just the right amount of funds, but it definitely takes moving in the right direction that has to be in alignment with your values. Rachel said that her investment advisors had made a few decisions that were not in alignment with her values and belief systems. You know, that can happen. We can kind of get off track. So it's important so that you have full understanding of who you're being in the world as it relates to your investments, what impact that you want to make with your dollars, but also how you can strategically build over time and make sure that you have the proper diversification so that you're not taking too much risk at any one time, and that you're taking advantage of those business cycles, as I mentioned before, to really pay attention to where we are in the business cycle so that you can either protect yourself, or as the business cycle comes back into a place where the prices are more favorable, then you move in and take advantage of the next up cycle that is inevitable. It's inevitable to come. If you're going to be alive for the next 20 years, or plan to be alive for the next 20 years, this is something that I'm an advocate for you to make sure that you have, so that you have people on your side that have the kind of knowledge and expertise that you deserve. So that's, I want to thank you, Rachel. This is what I'm actually moving into, is helping people one-on-one to help them with their quarterly reviews and really take a look at making sure that things are done for you the way that they should be. Okay, so thank you for that moment of indulging me to let you know how I can help you. Thanks again, Rachel. So any questions for me real quick? Let me go back to the chat and double check where we are here. Any questions that came up for you on that particular session or section? Because I want to make sure that I have time for you, for your questions, because we're at a point now where I'm really ready. I'm really ready to take off the gloves and start really teaching. Would you love that? Huh? Would you love that? All right, some of you have been in my classes before. Okay, so Natasha says yes. Mimi says yes. Okay, so I've got some, the next part that I'm going to be featuring is called Back to Basics. Back to Basics. Now, I'm going to go through this a little rapidly because it's meant to just give you a taste of what I used to teach to investors. Usually we would have 6-week courses of an hour or 2 hours each. You know, it's a commitment that people would come to the classes to really learn some of the basic fundamentals of how to determine whether an investment is quality or a good one for you. Yes, thank you, Rachel. Thank you so much. Patricia is saying thank you, Rachel. And so this next section is going to be called Back to Basics. I'm going to give you a little taste of some information that I will share. And if it's the first time you've heard of this kind of information, that's okay. And if it's maybe the 16th time that you've heard of this information, it's also okay, because as you learn, repetition is always good. It makes you powerful. I'm going to come back to this slide because it's important, but this is in what we want to do right now is move into what it takes to create wealth. And I think, first of all, you need to really make a decision that you're serious about it and that you do want to learn. And it's going to take potentially some stretching of your learning muscles. So what is it really going to take? I have 3 easy things that I like to say that it really takes. One, it takes a plan, but not just any plan. It takes a plan that you're going to follow. If you don't have enough funds, for example, to invest in building wealth or building a portfolio, then you need a plan to make sure that you achieve or gather the kind of funds that are required for you to make investments. Well, what does that take? Well, that means that you need a plan to either have more savings, less spending. I mean, that's pretty basic, but you need a plan to get the funds, and then you need a plan to invest the funds. Now, many people spend an awful lot of money with investment planners, and they receive a big plan, written plan this thick, that that's supposed to be action steps on how much they're supposed to invest and in what and in what and in what over the next 30 years. And that plan, often big paper wad, or now it's digital, it usually sits on somebody's desk and never to be seen the light of day since. I don't mean that kind of a plan. I mean a plan that you'll follow. So simple that it makes it fun. So I say there is a plan right where you are with what you have that's perfect for you. And we can determine that plan quite easily. No big deal. Then you need the principles. There are certain fundamental principles that you need to be aware of and learn. And it's not hard. It's learnable. That's the good news. Learnable. It's just that most people say, oh, I don't have the time. I don't have the interest. I'm too busy doing XYZ. But principles are important because principles are the fundamental reason why it works. And if you really want to build wealth over time, you would want to also learn the principles. And then finally, it's the people that you surround yourself with who've either had the kind of experience in the past that you need their input, or the kind of people, like Rachel was saying, that she hires investment advisors to help manage money for her. So in other words, you're building a team of people around you that can advocate for you, to help you. They usually and should be, hopefully, specialists at the principles and also specialists at helping you engage in your plan. So that is really kind of what it takes. Those are the practices of what it takes. If you're willing to start with this, then you can say to yourself, I believe I believe me. I believe me when I say I'm ready to become an ace money manager. Well, I believe you already are, but I'm ready to create wealth for myself. This is what it's going to take for you to get started. So let's talk about some of the principles, the back to basic principles. The first one is what to buy, when to sell, and then managing your assets. These are the fundamental keys for investment basics. And then so you ask, okay, how do I learn that? What to buy, when to buy, what to sell? Well, I have one fundamental principle that I'm going to teach you right here and now. It's so easy. Think about it. In real estate, they say that your wealth in your investment in real estate depends on one thing. Do you know what that is? Anybody in the chat? What does really good real estate depend on? One word. Starts with an L. How many of you know? Location. That's right. Patricia. So location. Natasha, location. Right. Location. So wealth in real estate building depends on location, location, location. In the stock market, the bond market, and everywhere else, there's one word that it depends on for building wealth. And I'm going to give that word to you. It starts with a Q. The word is quality. Quality, quality, quality. Now, those of you who know that because you love jewelry or something, you know that a high quality diamond is going to be worth more than a low quality diamond. So quality is the key for all value over time. So that is important for you to know, quality. So if you're building a portfolio that you want to have wealth, to build you wealth, what do you want in that portfolio? And if you're going to be building a portfolio of well-diversified assets, what do you want? What kind of assets do you want in those diversified assets? Quality ones, right? And would you agree that there are a lot of non-quality potential investments out there in the world? And maybe you've heard of some, and maybe you've invested in some of them already, and maybe you've invested at the top and all it did is went into the tank and maybe went bankrupt. And then you say to yourself, oh, the stock market isn't for me. Well, did you have a quality investment to begin with? Did you know that you did, or potentially maybe it wasn't so quality after all? How would you have known? What is quality? This is something most people don't know. What is quality? So there's a learning curve to it. The investment tool number one that I teach is to buy quality. Well, how do you measure quality? And now I'm talking about in the stock market in particular. Why am I talking about in the stock market? Because the stock market is an accumulation of companies that sell products or services. Whether it's the Standard & Poor's 500 of the highest quality companies, but there's a lot of other companies that don't even measure up, they don't measure up to being in that 500. There's hundreds of companies that are considered bad investments. How do you know what is a good investment? You have to find the quality companies. So I think there's a way to find a quality company that's as easy as 1, 2, 3, ABC. That's what I like to say. 1, 2, 3, ABC, just like that song of, you know, the old popular song, 1, 2, 3, easy as ABC. Baby, it's you and me, ABC, 1, 2, 3, easy, easy. We want it easy and we want it quality. So that's what I actually teach. There are 2 ways, actually more than 2 ways, 10 for sure, but I'm going to give you 2 today. They are financial quality and management quality. So there's a way to determine any company that is listed on the exchange that you can purchase. There is a way, a public company I'm talking about, not private. Public companies, there are a way that you can determine if a company is quality or not by means of measuring their financial quality and their management quality in a way that's easy. 1, 2, 3, ABC. So this is what for 15 years I actually taught to investment clients. And so we use a value line research. It's a research tool that you may or may not be familiar with, but value line is a company that, similar to Standard & Poor's or Reuters, those are 2 other competing companies, they publish research reports. And what they do is they gather all of the information that is public about a company. And after all, a public company has to report their earnings and their sales every quarter and a lot of other information too, to the public. And then Value Line gathers all of that information and publishes it every quarter by means of a new research report. And this research report is available to us. It's just like going to Google. If you want to Google anything, there's something at your fingertips. Well, Google doesn't have the ability to mash together all this data. However, Value Line does. So Value Line, you can find these at valueline.com, or you can go to your public library, which they have a free research department. And most generally, at least in the larger cities, they will give you for free the entire research quarterly and actively digitally online for free. All it takes is your library membership. So really, that's what I do. Otherwise, the subscription is quite expensive. I think it's $1,400 a year, something like that. But why pay that if you can get it for free, right? Which I do. So what we do is we get these reports, and then we look on those reports, and we simply add up the grade point average. I call it grading a company. Really easy. We grade a company. Now, many of you remember school, going through school, college, high school, grade school. You got A's, B's, C's, D's, right? The A's were the best, right? That means that you got good grades. C's and D's, not so good, right? C's and D's, not so good. It's the same thing here. We can grade a company and their financial quality and their management quality based on the research that this company gives to us. And all we need to do is learn how to read their report and find the little place where they're giving us the information. So there are companies that have grade point averages of A++. Walmart is one of them, for example. It's been in business all these years, and it has always had very high financial ranking. A++ is acceptable. A+, B, B++, but I will not invest in companies of any lesser grade point. And very many companies in the Value Line system, of all of the companies available out there, are ranked C, D, and some of them aren't even ranked at all because they're on their way to bankruptcy. Who knew? Well, you wouldn't know unless you take a look under the covers, under the hood, and just find out what their ranking is. So my question to you is, how many of you would be willing to take a moment, look at your portfolio that you own now, and just simply rank what you do own to get yourself educated in terms of what do you own? Do you own quality? Do you own a quality diamond in your portfolio, or is it a lesser quality? These are fundamental things that can be learned. So there's two ways, there's two fundamental financial quality grade points, and that's called financial safety on a scale of 1 to 5. And you can find this in the Value Line. Every company, every public company, on a scale of 1 to 5. How easy is that? I say I only invest in companies on 1, 2, and 3, the highest financial safety that there is. I will not touch a company that has a financial safety of 4 or 5, but they do exist. They do exist. Some popular companies actually have very, very bad financial ratings, because safety ratings, because they can't pay their bills or they have too much debt on the balance sheet. But how would you know if you didn't even look? So this is what we do. We make sure that we understand what we own. Do we own companies that are of quality? If so, great. If not, we might have a sale candidate there. But the underlying important thing is that a Value Line, it could be a Standard & Poor's company as research material as well. But this is what it looks like. This is a typical Value Line report. It looks like this. And this is Johnson and Johnson. So one page, all this data. I know it looks a little bit foreboding and overwhelming, but not really when you understand where to look for the information that I'm looking for to make sure that I can grade the company. And you look at a particular place. So for example, financial safety is always in the same place on a value line. Financial strength is always in the same place. And just so you know, Johnson and Johnson, there's the symbol J&J, that has a quality ranking, or what I call a grade point average, of 1 on a scale of 1 to 5. So that's good. A++ on a scale of A+ all the way down to D. So that's the highest quality. And then there's a third ranking called management quality that I don't have time to teach right now. But basically it's on a scale of 4.0 being, if you had a grade point average of 4.0, what is that? That's like straight A's, right? If you have a 3.0 grade point average, that would be like a B, right? Johnson and Johnson has a 3.3. 3.3 is a solid B average. So they have great, strong financial safety, and then a very strong B ranked management quality. Underneath that is a little bit of principles that you can actually learn how to grade a company. And if all it takes, every company has a report like this that you can look at, whether it's IBM, NVIDIA, Meta, every one of them have a one-page report, easy to find. You don't even need to know what all the rest of this is. You just need to know a few things so that you can find out if what you own is a quality investment based upon financial strength and based upon management decision-making. Now, one of the things that I also had spoken about before, when we talk about quality, there are certain things that you're looking for. As I mentioned here before, financial safety, I only want, so these are the determinations. I only want companies in my portfolio that rank 1, 2, 3, A++ to B++, or a financial grade point average of 3.0 or better, 3.0 to 4.0. I will not invest in companies that have a grade point average of below 3.0. There are a lot of really great companies that have 2.0, 1.0, and I won't touch them. Why? There's a lot of companies that are the higher quality. Why should I even bother? Why would you bother? So this is how you build a portfolio, is you build only with quality. And that, my friends, is the beginning of you learning some of the principles that it takes. Now, just real quickly, one of my favorite companies, Tractor Supply. I've had this in my portfolio again for probably 25 years. This company you might be familiar with. They have been on a growth track. Amazing. They have a 2 based upon 1 to 3, right? So it qualifies. It's right here, safety ranking 2. They have an A+ ranking that was over here on the bottom. I won't show that to you right now, but an A+ financial strength. And then on a scale of the grade point average, they got a 4.0, meaning perfect score. What does it take to get a perfect score like that? Well, real quickly, this is something that I will be able to teach you over time. Not that you're going to be able to pick this up in this particular class, but over time, there's a way to measure how this company, Tractor Supply, achieved a 4.0 grade point average, I call it. And that is that, real quickly, over a 10-year track record, I look for 10-year track record. I go back 10 years, and I measure how many years did they had increasing cash flow per share, earnings per share, book value per share, and sales. Those are 4 metrics that I measure. It's kind of like going to a doctor, and the first thing he does is he takes your blood pressure, takes your temperature, different metrics that are for your health. That's the same that we do to find out if a company is a quality company or not. We take their temperature, we take their metrics. How many years over the last 10 years have they done a good job? Have they had increasing cash flow per share, increasing earnings per share? And earlier today, I told you that the price of a company goes up for one reason only, and that is the strength of its earnings. And of course, sales has to come first, then cash flow, and then the bottom line is earnings. As the strength of a company's earnings continues to move up, so goes its price. Not like perfectly. There's still some gradations or up and down to that business cycle. But over time, it's an amazing thing that happens. Tractor Supply has gone from 40. This is only in 2011. The stock was trading at $40 a share. It's now at 265, my friends. Pretty good. That's what, 15 years? Not even 12 years. That's the kind of wealth you can build. Let's say you had $1,000 invested in that, and maybe not that far back. You could have invested $1,000 in Tractor Supply, let's say just in March of this year. Let's just look at that, March of this year, when it came down to $200 a share. You could have bought it then, and now it's at 268. That's 68 points. $1,000 would be worth 68,000 from March to today. How do you build wealth? Well, you build it consistently over time by making sure that your dollars are invested in quality companies. That's how you do it. Wow. Wow. That's right. Now, that's the fundamental reasons why a little education goes a long way, because it opens your eyes, right? Wow. Just think if you had a whole portfolio, maybe 10 companies similar to Tractor Supply that are high quality. It's interesting that NVIDIA, I looked at it the other day. I did the very same thing. I took out the value line. I looked at its safety ranking, financial safety. I looked at its financial quality. I looked at all the different metrics of their strength over time. It's been in business over 10 years. Do you know that it is an absolute high quality ranking, and the grade point average was really high? Not to mention that its earnings per share is growing at over 26% annually. What kind of growth pattern is that? No wonder that stock has been moving up in price by means of the earnings crescendo underneath. So this is something that's not rocket science. We can see it. It's available to everyone. It's just a matter of having a little bit of education, knowledge, and discipline. And that's what I love about the possibility of building wealth through knowledge. Building wealth through knowledge. Now, here's someone who's really built wealth through a lot of knowledge over time, Warren Buffett. And as it relates to prices, what I just mentioned to you in Tractor Supply, you said, wow, But here's the real cool thing. Warren Buffett only invested in companies that had growing earnings. He didn't care about the price. That's how he made his wealth. Let me repeat that. The greatest investor in the world, they say, Warren Buffett, didn't really care about the price. He invested by means of the quality of the earnings of a company. It says here, Charlie and I, Charlie Munger, let our marketable equities, meaning stock markets, the stock companies, tell us, they would tell us whether they were quality or not by means of their operating results, not by their daily price action up and down, whether our investments are successful or not. And here's what he says: the market may ignore business success for a while, but eventually the market will confirm business success, meaning the price will follow. Have strong earnings, and then the price will follow. So that's how we create a portfolio of the best high quality companies, whether it is the stocks of those companies or whether it is the debt instruments or the bonds of those companies. And you can do the same for the United States government, because the United States government has bonds that you can invest in. And we have similar metrics, different metrics that you can use along the way. So once again, this kind of concludes the idea here that if you're willing to become aware that this is a learnable possibility for you, that you can build wealth over time, here is how I simply recommend that we build wealth. Here's my strategy. I'm going to give it to you. It's so simple. Maximize the growth and the income potential of every investment and minimize its risk. This is a strategy. It takes work. It doesn't just come naturally. You want to maximize the growth and minimize the risk. Why? Because you want to have longevity. You want to be able to be in this wealth building game for the next 10, 20, 30 years. Am I right? With that, let me now ask you, what would be your biggest takeaway from today? What have you learned today that you could actually use? What has made the difference for you today that you could make a shift in your thinking? Has there been anything in particular? Anything in particular that you go ahead and write it in the chat. If there's one thing that has stood out for you today, an aha moment that really made sense or that caught your attention, what was it? Mimi says, maximize growth by putting myself first. I believe it is putting money building, wealth building first. Value line. Okay. Patricia says, I feel empowered. James says the common sense formula. Yeah, it is common. You know, it's common. It is a common sense formula. You know how rare common sense is? It's rare, but there are resources and it is learnable. Like Natasha says, the strategies are learnable. This is learnable. So I want to conclude by saying what I believe is my year-end prediction. I do believe we're going to have volatility next. And I would love it if each one of you would look upon it as volatility for the short run. Just almost like a hurricane ball of energy coming through, and it's going to shake up the markets for a while. But after that, the markets will go back to the earnings growth and the pricing mechanism will begin to go again. I believe we will have a seasonally strong year end, and then what they call the January effect. In other words, our economy is in very, very good shape. We have a lot of economic resiliency in place. What I'm asking you for, are you willing to create personal resiliency for yourself, for the long building process of your wealth, and take the long view for steady growth ahead? Are you willing to do that? Like by a show of hands, put yes in the chat if you're willing to begin with that personal resiliency, having faith in yourself as an ace money manager, taking the long view, going for growth. Yes, 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 I see that. And I stand for you as an advocate, knowing that you can start right where you are and you can always get better by means of knowledge, by means of your showing up for yourself. And so let me close by, again, reminding you of my offer to you. For the next 2 weeks, I'm putting at least 10 45-minute sessions on my calendar. You're welcome to them. All you need to do is go to this link, and I'll put the link in the chat again, and grab your spot. It's going to be an opportunity for you to talk with me as really just as an advocate, somebody who can listen to your circumstances and discern where you are and maybe the next best step for you. I think it's an important thing for people. Everybody needs a refreshing point of view for your financial goals, to really take yourself seriously and take your goals seriously, because you're unique. Your questions are going to be like nobody else. And I'm here to give a safe, appropriately safe, supportive environment just for you, so that you can have the psychological security that everybody deserves. Everybody, I believe, deserves in the financial realm, so that you can start having the kind of confidence to take clear, actionable steps for yourself. If that includes gaining knowledge, then there's some courses that you can jump into. But for now, what we're wanting to do is kickstart your understanding of where you are now. Recognize that you always have more than you think you do. You can start right now with what you have and start to build wealth now if you make the decision. And with that, you can always count on me to be an advocate in your corner. So I invite you to be one of those who will grab that spot. And thank you so much for being with me here today. I have enjoyed what I believe is my gift of teaching and perspective to you. And I hope that you receive it with a sincere heart, and know that if you decide that you want to move forward and have someone in your corner like me, I would be the happiest girl in the world to support you. So with that, it's 2:00. I know that we're at the end of our time together. I'm happy to stay a little later if any of you have any questions, burning questions. Thank you for your patience, for staying so long, and your enthusiasm for this. I'm happy to stay a little bit longer. If you need to jump off, I understand, and thank you so much. Thank you so much. And if you have a few more questions, I'm here for it. So with that, let me close the actual program, and then I will stay a little bit longer. I'm going to close the recording now, and then I'm happy to stay a little bit longer for personal questions. All right, everyone. Again, thank you so much. I appreciate you.